Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty failed to hold on to the early gains, end with cuts of 1%. Reliance, ITC and Bajaj Finance dragged the indices lower. Mid-caps marginally outperformed the blue chips. Wall Street closes higher ahead of Federal Reserve's first policy meet of the year. The central bank is widely expected to keep rates unchanged. Investors look for a fresh guidance on the next likely rate cut. European markets trade higher ahead of the Eurozone GDP data. Israeli commandos disguised as medical staff and civilians shoot 3 people dead at a hospital in West Bank. Israel's national security minister says the forces will operate everywhere and by all means. Meanwhile, the Biden administration says it's not seeking a war with Iran, but also vows retribution for the killing of 3 U.S. soldiers in Jordan, allegedly by Iran-backed militants. The National Company Law Tribunal agrees to hear a petition filed by Zee shareholders seeking the implementation of $10 billion merger with Sony. Zee denies Sony's claim that the shareholder is merely a proxy for Zee. Meanwhile, an emergency arbitration on the zee-sony tussle will kick off in Singapore tomorrow. After projecting a 50% upside for the Adani Enterprises stock, Cantor Fitzgerald argues that the company is undervalued on a sum of their parts basis. He expects the airports business to be demerged in 5 years, unlocking value for investors. That's a CNBC-TV18 exclusive. After 6 years, ONGC's investment in HPCL turns profitable. HPCL shares at a 52-week high, gaining 20% just this month. On the eve of the budget session of Parliament, the government holds an all-party meeting. Parliamentary Affairs Minister says the suspension of opposition MPs will be revoked, and he sent the request to reinstate the MPs to the Lok Sabha Speaker and the Rajya Sabha Chairman. Less than 48 hours to go for the interim budget. Sources say the government is weighing proposals to rationalize customs duties on more than 40 products to promote domestic manufacturing. Electronic goods and medical equipment are among the sectors likely to benefit. That's an exclusive. A 12,500 crore rupee support package for electric vehicles likely this budget. Sources say the scheme could have a 2-year tenure. The subsidy per vehicle is likely to be lower compared to FAME 2. Trucks and tractors could also be included in the scheme. Elon Musk's Neuralink finally implants a wireless brain chip in a human for the first time. The technology aims to help those suffering from debilitating conditions like paralysis to interact with their surroundings. Musk claims the initial results are promising. All of that and more coming up for you, but first up, the day's market action. Dalal Street failing to hold on to opening gains, ending at the day's low. So the Nifty and the Sensex were down about 1% at close. Reliance, ITC and Bajaj Finance were the losers today, but remember, they've also been the gainers in the last few trading sessions. Meanwhile, the broader markets outperformed the blue chips. Let's take a look at the markets. The Nifty 50 down by about 200 points. Reliance Industries losing about 3% today. ITC posted its earnings down by about 2.5%, and the Nifty Mid-Cap Index closing about 200 points lower. Prashant is standing by with the details. Prashant, markets closing close to the day's lows today. Going into the budget with a little bit of nerves?
400 up, 200 down. That's the kind of week we've been having, and it's just day 2 of this week that we wrapped up. I mean, if you want to look at answers, they're kind of hard to come by. Yesterday, of course, there was Reliance, which was the big contributor. Today, there was no real one single name which led the losses. It was just pullback and profit booking. Remember, through the course of this week, you got pretty big events lined up. Thursday, the market here will react both to the FOMC and, of course, the budget. The union budget, the vote on account as well. Now, just a quick look at what sort of happened. The Nifty on your screen, 200 points, as I said. Nifty Bank correcting as well, pulling back. And that, of course, has been the weaker index. The pullbacks have been weaker. And on the downside, it does more. Now, mid-caps and small caps did well for the bulk of the day, but there also gains came off towards close as the rest of the market felt the heat. As far as large caps are concerned, losses coming through in the Bajaj twins, Bajaj Finserv, Bajaj Finance. Bajaj Finance, of course, numbers, credit costs are slightly higher, margins are slightly under more pressure. Titan was another one which saw some pressure. Ultratech, Reliance gave back about 3% of that big 7% surge yesterday. And there was NTPC, which has done so well over the last many months, which pulled back. Gainers coming through in names like Tata Motors, There was BPCL and there was Aisha, which looked, which saw some gains as well. Now, in the broader space, advance decline was almost equal, 1:1. But here are some pullbacks. IFCI, Ircon, there was Trent, which sold off about 6%. Sterling Wilson was down 4%. Again, these stocks, some of these stocks have had one-way moves. These are just pullbacks. Rain Industries, something similar, 4% lower today. Coromandel was down 8%. Manyavar was down about 6.5%, 7%. That's Vedant Fashions. KEI down 4%. Chambal Fertilizer, NFL, Borosil Renewables. But I have to say, I mean, these are all mostly coming off of extremely large gains that we've had in the very recent past. As I said, I mean, big events lined up. So a little bit of pullback, and now we are on a more even kind of a keel as we look forward to the US session later and, of course, tomorrow morning. Back to you.
Prashant, many thanks for joining us. Global markets will closely watch the US Federal Reserve's policy decision, which is slated tomorrow. Investors largely expect the Fed to maintain key interest rates at current levels. As per the CNBC Fed survey, only 2% of market participants expect a rate cut tomorrow. 49% expect a rate cut in March. 99% are hoping for a rate cut in June. So we will, of course, be tracking those developments closely. In a surprise move, Saudi Arabia's state-controlled Aramco has announced that it is pausing plans to raise its crude production capacity from 12 million barrels to 13 million barrels per day. In a statement, Aramco has said it's been ordered by the Saudi Energy Ministry to maintain capacity at current levels. However, the reason for the move has not been disclosed and comes amidst concerns over the outlook for oil demand. Meanwhile, crude oil prices rose as escalating geopolitical tensions in the Middle East continue to fuel supply concerns. Well, let's talk more about geopolitical tensions in the Middle East. The US is exploring options to retaliate against Iran-backed militants after a drone attack killed 3 US soldiers in Jordan. The Pentagon, in its statement, has said, and I quote, "The US does not want a war, but will take necessary action," end of quote. Meanwhile, Iran has denied any involvement in the attack. A lesser-known group calling itself the Islamic Resistance of Iraq has taken responsibility for the attack on US troops. Onto the war between Israel and Hamas. Israeli commandos disguised as medical staff and civilians have shot 3 people dead in a hospital in West Bank. Israel's National Security Minister released CCTV visuals of the hospital raid and said the forces will operate everywhere and by all means. Meanwhile, a senior Hamas leader is expected to visit Cairo to discuss a ceasefire proposal that involves release of hostages. Back home, here's the latest in the corporate battle between Sony and Zee over their merger dispute. The National Company Law Tribunal has agreed to hear a petition filed by a Zee shareholder seeking the implementation of the $10 billion merger with Sony. Zee has denied Sony's claim that the shareholder is merely a proxy for Zee. The development comes days after Sony pulled the plug on its merger deal with Zee, citing breach of agreement terms. Zee has denied the allegations. Ashmit is standing by with the details of the hearing at the NCLT. The matter now at the NCLT, separately also headed to arbitration in Singapore. Take us through the arguments that were made today in the NCLT, Ashmit.
Well, today we saw the first public face-off, direct face-off between the two entities on a public platform, that platform being the NCLT Mumbai. Now, importantly, the NCLT Mumbai was hearing an application filed by an entity called Madman Film Ventures. Now, this entity claims to be a shareholder of Zee. This entity, what it essentially argued before the NCLT is that, look, the NCLT has granted its approval. There were disagreements between the two sides on whether or not Puneet Goenka should continue. These disagreements need to be set aside, need to be ironed out, and that in the larger interest of the shareholders, there should be a move towards sealing this deal, sealing this merger. That was the application, that was the prayer made by Madman Films. But what's important is that Sony was very clear. In fact, they sought an outright dismissal of this application, saying that Madman Film Ventures is nothing but a proxy for Zee. What they're essentially saying is that Zee is trying to implement this merger, is trying to enforce this merger through its shareholder. Not just that, Sony also clarified that the NCLT approval was a conditional approval that was granted to the merger, that there were conditions that had to be met before that merger, and that this is a case where those conditions have not been met, and therefore no case is made out for implementation or enforcing that merger. Let's keep in mind that the parties are engaged in arbitration in Singapore. That is what both Sony and Zee were alluding to. And finally, Zee also clarified in its position that in no shape or form is Madman Films any proxy to Z Entertainment, the company in question. Now, so what are the takeaways? Well, for one, NCLT Mumbai has not agreed to the Sony demand for dismissing this plea application. On the contrary, what NCLT Mumbai has done is that it has said that this is a fit case for further hearing, and to that end, a notice has been issued to Sony and to Z to come back with their response on the way forward as far as this merger is concerned. The next hearing is scheduled for March 12th.
All right, Ashmit, appreciate you joining us here with the details. Meanwhile, an emergency arbitration on the zee-sony tussle will kick off in Singapore. Sony is seeking a termination fee of $90 million from Zee. Zee has called the claim untenable. Of course, both those developments will be tracked closely here. The big interview of the day, a day after US brokerage firm Cantor Fitzgerald assigned an overweight rating on Adani Enterprises stock and projected a 50% upside. Brett Knoblauch, the author of the report, spoke exclusively to CNBC-TV18. Now, he argues that the company is in fact undervalued on a sum-of-the-parts basis. He also said that he expects the airports business to be demerged over the next 5 years, unlocking value for investors. Sonia is standing by with the key highlights of the exclusive conversation with Cantor Fitzgerald and why it is bullish on Adani Enterprises. Sonia.
Well, the Adani Group stocks have been buzzing over the last 2 days after New York-based brokerage house Cantor Fitzgerald initiated coverage on Adani Enterprises, which is the incubating company of the Adani Group. We spoke to the author of that report, and he said the two businesses that they are most interested in is the new energy business as well as airports. Listen in to what they had to say.
We think three segments, mainly roads, airports, and what they call a new energy ecosystem, are currently worth more than what all of Adani Enterprises is valued at right now. The segment that I'm probably most positive on, I would say within 5 years, is probably airports. This is a segment I think can do $1 billion plus of EBITDA within 3 or 4 years. Close comps are trading at 20 times that. So you could see within 3 or 4 years, Adani Enterprise look to demerge that business at a value close to 20 to 25 billion, and Adani's Enterprise's current market cap is just 40 billion. Beyond that, you look at new energy ecosystem, which includes solar manufacturing, wind turbine manufacturing, and then there are plans for green hydrogen ecosystem. That green hydrogen ecosystem, which actually is not in our current valuation, is something that could, within 10 years, do, call it $7 billion of EBITDA.
We also probe deep into the rationale behind this report, whether they find any global benchmarks to which this Adani Group can be, compared, and also the growth in the airports vertical, what led them to come out with this coverage report. Listen in.
Here you're getting airports, your roads, renewable energy, called old energy or fossil fuels, with what they do with mining and called commodity trading. So it's call it a diversified play on India, but with leadership that I think has proven success of growing above market rates. I do think that has been a hindrance. I think some of that has been the lack of institutional coverage on the Adani Group. There's not many analysts out there writing research on it, which, when we first kind of stumbled upon it was a bit surprising, given I think it's the 10th largest non-financial stock in India, which is, now the most populous country in the world. So I do think that's a bit surprising in terms of feedback we got. We thought interest was very good.
Well, as you heard, Cantor Fitzgerald is very, very bullish on the Adani Group stocks across businesses, but they believe that particularly airports has a long runway of growth, and the new energy business is something that they're focused on.
All right, Sonia, many thanks. Now, State-run Oil and Natural Gas Corporation, that ONGC's investment in Hindustan Petroleum Corporation, that's HPCL, has turned profitable after nearly half a decade. Shares of HPCL hitting a 52-week high today. The stock is now up 20% in just the month of January. Hormuz is standing by with more. Hormuz, so that bet paying off for ONGC.
Well, if long-term investing had an example, I guess this would be a primary one. And it took 6 years for ONGC's investment to turn profitable, as you said. Now, ONGC back on the 31st of January 2018, which is exactly 6 years ago, had acquired that 51% government stake in HPCL for around 36,900 crore rupees. and the shares were acquired at 473 rupees a piece, which was a 20% premium to HPCL's closing price of that day, which was around 397 rupees. Now, the recent surge in HPCL, it made an intraday high of around 485 in today's session, which made sure that it crossed ONGC's buying price, which was 473, and based on the current closing price of HPCL today, the current stake that ONGC has in HPCL is valued at close to 38,000 crore rupees. Now, after underperforming for most parts of 2023, the shares of HPCL have seen a massive surge. They were up 40% in November of last year, 15% in December, and they are up another 20% this month, which is in January. Now, besides ONGC, India's mutual funds own around 14% stake in HPCL, and also LIC, which has around 4.5%. So it took a while, but ONGC's investment has finally paid off in HPCL. Back to you.
Well, thanks very much, Horma. It's time for us to end a short break, but up next, less than 48 hours to go for the interim budget. Sources say the government is weighing proposals to rationalize customs duties on more than 40 products. That and more when we return. Pharma major Dr. Reddys reporting Q3 numbers that are above street estimates. Excl is here with more on Dr. Reddys. Excl, what does it look like this quarter for the pharma major?
Well, definitely a beat which is actually coming for Dr. Reddys, so it is going to be reacting to its numbers come tomorrow's trading session. Revenue was up around 7-odd%. The street was anticipating around a 2 to 3% growth this time round. EBITDA has come in at around 2,100 odd crores, again better than expectations, with margins coming in at around 29.3%. The street was anticipating around 28.6%. Profit also higher than expectations. Now, in terms of key segments, the global generic segment, which is basically your entire formulation segment, was up around 7% year-on-year, 3% Q-on-Q. And we had geographies such as North America, which is around 47% of their sales, which seemed to have actually led the beat this quarter for them. So that was up 9% year-on-year and up around 5% Q-on-Q. The street was anticipating maybe a sluggish US business Q-on-Q simply because of lower Revlimid generic sales, which is one of their blockbuster cancer drugs. Now, Europe was up around 15%, which did well as well. We had Germany, which was up 21% year-on-year, as well as UK, which was up around 9%. India, 16% of sales was largely in line with estimates with a single-digit growth of around 5% on a year-on-year basis. Emerging markets was a bit sluggish because Russia, the likes of Russia, was down around 14% because of a high base as well as the currency impact. But overall, good set of numbers, better than street estimates, led primarily by the US business.
All right, Ekta, many thanks for joining us. That's Dr. Reddys for you. Now, on the eve of the budget session of Parliament, government held an all-party meeting today. Parliamentary Affairs Minister says the suspension of opposition MPs will be revoked. He sent the request to reinstate the MPs to the Lok Sabha Speaker and the Rajya Sabha Chairman. The suspension of 11 Rajya Sabha MPs has already been revoked. Remember, a total of 146 opposition MPs from both houses were suspended from Parliament at the end of the winter session. Here's the CNBC-TV18 exclusive. The government is weighing proposals to rationalize customs duties with less than 48 hours to go for the interim budget. This, according to sources who say that more than 40 products are likely to benefit from the proposal that's been made by the Commerce Ministry and sent to the Finance Ministry. Timsy standing by with more. Timsy, take us through what could be on the anvil.
Well, that's right. In a bid to give a further boost to the Make in India program, the government is considering the proposal to rationalize custom duties on 40-plus products. A detailed study which has been shared by the Commerce Ministry to Finance Ministry, sources say, is under active consideration, as the idea is to do away with inverted duty structure and correct duties which are making Indian manufacturers less competitive. Sources say that duty rejig candidates include raw materials for metallurgical use, farm machinery, chemicals including diagnostic reagents, LNG, certain types of medical devices for public good, electronics and telecommunication components, certain items for food processing industry, and many more. Sources shared that the view presented by the Commerce Ministry is that the duty inversion caused due to free trade agreements needs a correction. Also, the duty inversion is a result of past duty hikes to cool off commodity prices, which were also introduced to check dumping of Chinese goods. That is what was making it tough for the local products to compete with imports. Basically, since there is no duty on foreign goods under FTAs, but Indian companies pay duties on components, raw materials, imports, which are necessary for value addition, were actually pushing down the Indian manufacturers. On the other hand, understanding the concerns raised by Commerce Ministry, Finance Ministry is of a view that some duty correction decisions on urgent cases and goods are likely in the interim budget, but on this proposal as a whole, the government would like to wait for the full budget to correct duties for the remaining products, as these custom duty changes won't be based on revenue considerations, but are only with an aim to protect the Indian manufacturers. So what is to be seen is whether the government takes this shot on the 1st of February or decides to wait for the entire list to be corrected or incorporated, for that matter, in the full budget, which is likely to be presented in July. Back to you.
Timsy, many thanks for joining us. Now, the electric vehicle industry is also likely to get a boost. We learned from sources the government is expected to announce a 12,500 crore rupee support package for the sector on the 1st of February, but the subsidy per vehicle could be lower when compared to the phase 2 of the current FAME scheme, which is set to expire in March this year. Parikshit is here with more. Parikshit, so in the interim budget, likely relief being offered for electric vehicles?
Well, yes, this is an interim budget. So let's see how the finance minister frames this for the public and the EV industry. But we have been told by highly credible sources that, yes, a FAME 3 scheme is expected. It may not be called FAME 3. It would be called an electric vehicle support package, so to say, an electric vehicle roadmap. But at the same time, the threshold, the subsidies per vehicle would be lower. This scheme would only be for 2 years as opposed to 5 years under FAME 2. And this is because the government wants to taper down subsidies. It wants subsidies for electric vehicles, at least in some segments, to end completely in the next few years. So if the current outlay under FAME 2, which expires in March 2024, is 10,000 crores, the entire outlay for the 2-year electric vehicle support package will be 12,500 crores. Now, we know that trucks, tractors may also be included. There may be a greater push for electric three-wheelers and lower subsidy thresholds for all the other vehicle segments. There will be incentives for charging infrastructure as well. So let's see how the government frames this scheme. We are also learning that a 3,500 crore rupee payment security mechanism is also under consideration. This could come in March outside of the budget. And beyond this, a larger de-risking fund to the tune of 50,000 crore rupees for increasing adoption of electric buses in the private sector is being considered, but that may come up sometime at a later stage in the year.
Parikshit, many thanks for joining us. So we will watch out for an announcement that will ensure that there is support given to electric vehicles, perhaps as early as the interim budget. But with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. We are counting down to the budget, so stay tuned. We're back in a minute with a lot more.